Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the MJ sector. So I talked about a position that I swung in CGC. It was a third of a position left from a day trade. I sold that pre-market in the upper 42s as I was not going to be around much today for trading. And we ended up closing pretty weak down near the low after cooling off some short-term RSI levels. So we're still looking down at psychological levels, 42 psychological, 41, 40.33, and then 39.66 are the levels that stand out. 4-hour RSI cooled off today on that bounce. The hourly RSI cooled off. So those are both things that tell me if I am looking for an oversold bounce, be more patient because the short-term bounce cools off things to allow for another leg down. We're not really oversold on any time frame, so that makes me uninterested in trying to play a bounce at this point. The weakness right now that we're seeing is attributed to SPY, in my opinion, for the most part, obviously talking in a broader sense of the sector. The USMJ sector topped out about 6 weeks ago, roughly speaking, and the Canadian sector topped out about 4 weeks ago. SPY topped out about 4 weeks ago. So essentially the US sector started pulling back initially, then the market and the Canadian sector joined in, and so if we're going to see this sector bounce with any meaningful follow-through, it's going to have to be on the back of an S&P 500 bounce, in my opinion. And we have to change daily trends on the S&P 500 with higher lows and higher highs in order to be looking for any kind of follow-through in the MJ sector as well. So CGC from here, weekly time frame still in an uptrend, but the bulls better find that support before 39.66 breaks. Otherwise, there's a lack of support immediately after that level. Cron pulled back and is following through with weakness after breaking the daily little higher low. We're now looking down at 14.45, and the odds that the weekly chart is not going to change the trend are still pretty high. Anything under 17.67 is a lower high. We topped out at 16.55, and if we drop down and break 14.05, then clearly that will tell us that the bears still have complete control. So best case scenario for the bulls is to maintain these levels of support, but not looking good at the moment with this weak weekly bounce attempt. And that is why I have exited my swing position, locking in profit while I still had it. ACB weakness continues. The red flags have been flying. Lower highs and lower lows continue. We broke 803 support. 792 is holding by a penny. If we break 792, next support level is 786 and 779. Looking at it on the weekly time frame, still pulling back. Lower highs on these bounce attempts. No follow through, no confirmation of the trend change was the red flag on the daily time frame for ACB. On APHA, we're still pulling back as well. Lower lows today. Still looking for a higher low compared to 638. I believe news came out. I'm not sure if it was after hours. I believe it might have been after hours with a delay on one of their facilities. So that has a potential impact of negativity. Let's actually see if there's anything that stands out in extended hours. 682. So nothing very notable. Perhaps a little bit of a lower open coming tomorrow. So 680, 664, and 638 are supports, and the odds that we can see a higher low and higher high on the daily now are decreasing, and the odds of an equilibrium once we find our bottom, and then we'll look for a lower high, those odds are increasing. OGI. So our daily lower high was set, and now we're scouting for our daily higher low to be set. We got the high, all-time high, low of the pullback, lower high, and now we're looking for 715 support to hold, and for this range to continue tightening. The volume is dropping off, which is normal for tightening equilibriums, and we'll watch to see if there's a potential play. What's the hourly RSI? If we see another leg down and break the low of today, the hourly RSI will be getting close to oversold, and perhaps if we drop down to 730 or below, the hourly RSI would be oversold, giving us an hourly oversold bounce play, bottom fishing off of 715 support. I would be watching for that. Otherwise, I'm just going to patiently wait and see how things tighten up and see if I get interested in a nice clear signal sometime next week. Hexo, still in this tight pattern, and it's the same kind of setup here for Hexo where we're tightening up in this range, an equilibrium, 654 is the double bottom and the must-hold level, and the hourly RSI was just about oversold at the low of the day today. Weak bounce, not a whole lot of follow-through, and the extended hours RSI is cooling off a little bit. Again, maybe a bottom fishing play off of 654, but if I don't see a setup that I like, and the setup would need at least short-term RSI levels oversold to play off of 654 support, if I don't see a setup that I like, I just patiently wait for the tight range to give me an opportunity. And if we break support to a lower low, I will have no interest in playing Hexo bullish at this time. So TRST is following through for the bears. 740 was support. We broke that level, dropped all the way down to 726, dropped 2% below that level, and we are still in an area with a lack of support. So we're now looking down at 7 psychological as the next level, and anything on the daily time frame under 799 is just a lower high. Bears keeping control, dropping to lower lows, and again, prolonged weakness as long as the market is weak is just a generalized, simplified way to look at things, because if you weren't looking at the S&P 500, it would just feel like this slow drag down forever. But when you look at SPY and what it's done the last month, it makes a lot more sense. And when SPY gets oversold on the daily, which we're approaching, oil is oversold on the daily, that's when I'm going to start looking for more meaningful bounces to get follow through. VFF on the daily time frame still pulling back as well. Held on a bit today. Daily inside bar, break of 1292 would be bullish tomorrow for just looking for a short-term bounce to set a lower high, and a break of 1263 would be bearish, and we're setting up for an equilibrium as we pointed out yesterday in the 2-day time frame. We'll look for a higher low, but with such a large range, a 40% range between 1029 and 1438, I would expect to trade within this range for at least a few weeks, unless some kind of big news comes along. T-God, weekly time frame showing weakness, dropping down to lower lows. So T-God bears back in complete control. Weekly chart, lower high and lower low pattern continuing. 374 support, only breaking by a couple pennies at this point, but again, it's a lack of support after that. 369 and then 352 after it. Anything on the daily time frame under 410 is now just a lower high. LABS, daily time frame, very weak bounce. We filled the gap, but it's a bear flag setup right now. If we break 562 support tomorrow, the odds of a daily bear flag will increase a good bit. And then if that breaks, we're looking at 546 and then down to 533. Very weak bounce, no follow through, keeping the bears in control overall. Everybody we're looking at is bearish in the short term. Oil's on the daily bearish, close at the low of the day, 4 days in a row, confirming the bear break of the equilibrium at 56, and here we are 10% plus below that level, and now we're looking down at 455 as the next support. Weekly time frame trying to form a higher low, and anything above the all-time low will be a higher low, but equilibrium is setting up with the size of the pullback from that all-time high at this point. VGW, anything under 437, just a lower high, supports down at 392, close to breaking this equilibrium bearish, still within a tight range. Most other names have already clearly broken bearish, so that's a little bit of a difference, but certainly not looking very favorable for the bulls with the weak closes the last 2 days and support in sight. Curaleaf, earnings came out. We'll see how the reaction goes tomorrow. GTII earnings came out. Looked fairly good overall, but again, it's going to be a completely different reaction whether we have SPY green by 1% or red by 1%, in my opinion. The bulls, if they can hold 1169 and break 1304, it's a daily trend change. And if we break 1169, we confirm the downtrend and see further downside with 1097 as the next support. TRUL, breaking support, losing the daily higher low, further sell-off since its earnings report, and it's just a weekly lower high being set here at 1807. So now we're looking back down at support. Next level after 1581, the most important level is 1455, and the bulls have to hold that level if they want to try and form a weekly higher low to give themselves a shot at a trend change, but again, not near happening at this point. CWeb, multiple inside bars, support is 18, make that 1915, and then we'd be looking down at 1857, the low of the pullback. Resistance is 1960 and 2020 as the two most important levels for me. So bears still holding on, bulls not really doing anything. Very low volume day today, not a whole lot to talk about. IAN, Inside bar today, earnings, don't believe they're out yet. Keep in mind that conference calls are going to have an impact along with earnings as well, and most names have conference calls tomorrow morning after their earnings. So IAN, haven't seen those numbers yet, but if it's a bearish reaction, we're looking at a break of 519, and we'll look to 5 psychological. If it's a bullish reaction, anything under 569 is just a lower high. MedMen, lower high set on the daily. That's what we were looking for. Didn't expect to break 5 or make that 335 resistance. Now the bulls must hold 290 and break 321 to change the daily trend. Yet another rejection from the daily 12-period exponential resistance, and that now makes almost a half dozen rejections in the last month or so. ZYNE, daily inside bar, as soon as the bulls were unable to break the high of yesterday, 1334, we rejected by 13 pennies and then pulled back. So looking at it on the hourly time frame, we do have a little lower high and lower low on the hourly, so resistance is 1287 and 1321, and support is 1233 and 12 psychological. Overall, it's a very bleak picture for bulls out there, and that's to be expected with market weakness overall. And when you've heard me say a dozen times over the previous few months, what happens when the S&P 500 sees weekly consolidation? Well, here it is. I was never comfortable in any kind of meaningful swing position in the MJ sector as long as the S&P 500 was extended on the weekly time frame with no consolidation. So now we're seeing that consolidation, and I would love to see SPY oversold on the daily, some individual names oversold on the daily as well, and that's when I'm going to look to start building some longer term positions. Right now, I'm all cash aside from IAN, a position there, and it's not a huge position. I will look to build around it and play around it as I have been doing recently. There's going to be good opportunity in the sector. There's no doubt about that, but it might take a month or two. Depends on what the overall market does. We know we have Canada and edibles this fall. There's going to be a potential little bull run and a sell the news event, in my opinion, with regard to that news. And then, of course, any kind of news out of nowhere on the U.S. for meaningful news, whether it's the Safe Banking Act, whether it's rescheduling, that would trap a lot of shorts if it came out of nowhere. But something like the Safe Banking Act has to go through so many hurdles. We got to go through Congress. We got to go through the Senate. So it's a slow road, and it's not the kind of thing where we have to be worried about missing the train, essentially. So bottom line is a lot of patience. And this is the kind of scenario where it's great to be all cash or it's great to be in short positions. I've never really shorted the sector significantly. I've day traded short before, but it's hard to get availability on Fidelity for shares to short. And I just personally prefer playing oversold bounces to playing short, especially in the MJ sector. That's just my style as an individual trader. So I patiently wait for those oversold bounce setups, and I'm going to be watching to see if things get to extreme levels on the daily time frame, specifically in the S&P 500. So I appreciate you tuning in. We'll hang in there. This is the kind of scenario where if you have the patience to continue scouting things, to establish game plans, it rewards you eventually. We know that the MJ stocks are going to go back up again. It's just a question of when. So if you can follow along and establish a game plan and stay tapped into the market to a certain degree, it pays off and you get rewarded for that. So if I disappeared and didn't watch the market for 3 weeks, I would be completely out of the loop and I wouldn't know heads or tails in terms of trying to establish positions or what to be doing, which is why even if I'm not trading this sector, which I've been trading it much less recently, you better believe I'm watching every day and I'm watching for setups that present themselves. Appreciate you watching. Two good things, no end of the day video here today. I'll do a garden update this weekend. Things are popping off out there. And I hope you have a good rest of your night.